Hey, welcome everyone to Dividend Grinder. This is the Cash Flow Challenge. If you are new to the channel or new to this challenge, new to the series, the whole point of this is to build my portfolio up to the point where I am receiving, on average, $500 a month in dividend income. So I'm more of an income investor than a dividend investor, a pure dividend investor, because they look more towards value. I look more towards income. So maybe I should be called a income grinder. But anyway, $500 a month is the goal. You're looking at the portfolio. We're at all-time highs right now. It's doing fine. $33,198. We have a $2,000 gain, of which we are at a new high of $1,205 in earned dividends. The other half coming $820 in capital appreciation. So in terms of M1 Finance's money weighted return, we are at 14.56%. But here comes the channel update with the cash flow challenge, because if you see by looking at our spreadsheet that I keep every single day, the last time I recorded this, I'm up to $150.90 per month. And right now I'm up to $151.69 every single month on average in dividends. Given that the projections that no cuts happen and yada, 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 everything that I have here would be accurate according to the last payout that I had. So not much has been changing, and there's a reason why. It's because I've just trying to be building this dividend indexes piece quite substantially, and that's pretty much all I've been doing recently. It's just trying to fund this. It's at $5,630 right now. I want to get it to a minimum of $10,000. Let me make sure my mic's working. Okay, looks good. $5,630. I want to get a minimum of $10,000. I want to get a minimum of 32%. That's where $10,000 would roughly put it. Ideally, I would like it 45 to 50% of the portfolio. In this pie is Vanguard's high dividend ETF, Vanguard's international high dividend ETF, and then S&P 500 equal weighted ETF. So I have representation of the S&P 500. I have essentially the blue chips in the United States with Vanguard's high dividend ETF, and then I have other blue chips in VYMI, but VYMI isn't necessarily all blue chips. The whole fund purpose of VYMI is to have international holdings that are expected in the next 12 months or the next fiscal period to pay higher than above average dividends. So this one actually pays a higher yield than VYM, and it has a higher expense ratio. That's to be expected when you have a ETF that is all international plays. There are no United States equities in there. So majority of it's in VYM, 55%, 25 is going to VYMI, and then 20% into the S&P 500 equal weight. So it's heavily weighted towards the United States high dividend payers, a lot of which are just blue chips, stuff like Lockheed Martin, stuff like Procter & Gamble, stuff like Johnson & Johnson, McDonald's, Pepsi, Coca-Cola. Those are all the stocks that are in VYM, and they're heavily weighted towards those stocks. Then you have like AT&T, you have Altria, Philip Morris, those kind of sin stocks, but they're still high payers. So they're going to be in there as well. It's a very high quality ETF in my opinion. Very low expense ratio at like 0.06%. VYMI is a little bit higher. It's like 0.3% or something around there, but that's expected when you have international holdings. So this is all I've been doing, is investing in dividend indexes. And, this brings me to the channel update part. So I normally do this cash flow challenge every single week, but as you can see, there's not much improvement because all I've been doing is buying indexes, and that specific piece of the entire portfolio only yields 3%. So it's not going to grow that much when I buy every single day. It doesn't matter that I'm putting in a minimum of $30 every single day. It's still only yielding 3%, so it's not going to grow that much week to week. So from now on, I'm going to start doing the cash flow challenge on a monthly basis rather than a weekly basis. You'll see a lot more change. I can just focus on one tab because right now you're looking at August 2019. So next time, you can just focus on one giant tab, what we've had in the past. I'll start on the first week of the month. So September's will be a little abbreviated just because there's only like 1 or 2 weeks left in August. But then we'll have another 4-week series after September, and then yada, yada, yada. It's going to be monthly. You get the point. It's not going to be weekly because I feel like I'm shortchanging all of my watchers out there because, I'm just investing in index funds. That's all I'm doing. And it's not very interesting to watch, quite frankly. But before I get into more of that, let's just look at the dividend payouts that I've had since the last time I've done the cash flow challenge. Stag Industrial, Realty Income Corp, Main Street Capital giving me 1350, 20, and 1520 respectively. Procter & Gamble I've sold just because I knew I was going into VYM, so I actually own Procter & Gamble indirectly through the VYM ETF. So they paid me $2.24 before I ultimately sold them. The red are positions that I've sold. Procter & Gamble, obviously I VYM. The short-term bond ETF, that was just where I stored excess cash, and I used that and I converted that to the high-yield benchmark. SPHD, this was kind of, I sold it because it'd be redundant if I own that. And VYM and RSP, the S&P 500 equal weight ETF. And then LTC and EPR I've sold just because I like the other monthly holdings better. And I wanted to condense my portfolio as much as possible. I wanted as little holdings as possible with as much exposure to the dividend world as possible. And I believe I've done that. So when a true dip comes, not like a 2% volatility swing that we've had in the market the past couple times, when a true dip comes, the 10, 20, 30, 40% of the world, I will have very few holdings that I can just put a whole sum of money into. I'm well prepared for that. If you have a ton of holdings, you're going to really have to put a lot of capital in, or else it's just going to be spread thin across all those holdings. So not as many mouths to feed, and that's the way I wanted it. So let's go back to the channel in general. So look, when I first started with M1 Finance, I made a name for myself in the YouTube community by pretty much being the daily dividend guy, where I would own all these dividend payers, all these monthly payers, like an absurd amount of holdings. And the whole idea was to get a dividend payment every single day. It doesn't matter how small, because anytime you're getting a payment, it just compounds, especially since I started doing daily deposits. Look, at the end of the day, I never anticipated my portfolio to get this large. When I did those experiments, it was for YouTube's sake. It was for entertainment's sake. I mean, you have to put on a show if you want any views. And that's what a daily dividend portfolio was. It was a show. People would never be interested in investing in it to themselves. And why would you? It's not that intelligent of a portfolio when you look back and look at all the holdings that I had. But nonetheless, it was very entertaining to see what happens. It's an experiment. And before I knew it, a lot of people started using my referral link. My account grew very rapidly. And before you know it, I was above $10,000 in no time. And I'm like, holy crap, this is gaining really fast. And I'm holding all this stuff that I don't necessarily think is the best. It got to upwards of 20,000. I'm still like, wow, look at how this portfolio is doing. I've changed the philosophy, the mindset, or whatever you want to call it. I didn't change the philosophy, but I've done all this different stuff, and it's like people are eating it up. But in the back of my mind, I'm like, this is not how I really want a large portfolio to be. I've always wanted it to be ETF or index based. I just never, that's boring to a lot of people at the end of the day. But, good investing is boring. End of the day, end of the line. Let me double check my mic that it's working. Okay, good. So what I'm getting at is that I took a step back and I just realized, if I were to start a brand new portfolio right now, what would I do? And the answer is I would have a minimum of 50% of my portfolio into indexes and ETFs. That's just the most logical thing to do for me personally. That is the most intelligent move that I could make with this money, because I don't want to be obsessive about this portfolio. I don't want to have to dig for value stocks every single time. And what's the best value? What do I have to buy the dip on today? I don't want to have to concentrate that hard on a portfolio. The whole point of dividend investing is to do 1 minute of work and then you get the yield. That's the great thing about dividend investing. You don't have to rent out duplexes and live in one of them, and rent out a family to the other one. You don't have to buy real estate, fix it up, get on your hands and knees and hammer, new whatever you want to do. But that's not the point of dividend investing. It's supposed to be easy, and I want to keep it easy. And ETFs are the way to make it easy with expected outcomes that are more in line with what you would expect with market returns. So I feel like I would be doing a huge disservice to all my followers out there if I just started talking about ETFs and index investing, because it gets very boring and anyone can do it. It's not an interesting topic to talk about for me personally. And I don't want it to ever be interesting because, that's not going to be the smartest thing to do. Right now, I'm transitioning my portfolio to ideally 45 to 50% index holdings. It's going to be very boring along the way. If you follow me on Twitter, which is at Dividend Grinder, you can see I'm just buying indexes every single day. And it's not fun to watch. It's quite boring, but at the same time, I know I'm doing the right thing. I don't anticipate changing this portfolio. Like, I love the way this portfolio is set up. I don't want to change it ever. Seriously, I'm done with all that stuff. Everyone thinks that I'm joking here, but no, like, I'm done. Like, this is like the final portfolio. Yeah, maybe I'll sell like one or two or add one or two once the recession hits, because, you know, I talked about wanting to buy casino stocks when it's a recession because they're going to be dirt cheap. Stuff like that. Yeah, I can always add to the portfolio. There's nothing wrong with that. But I don't want to change like anything about this portfolio. I love it. Once I get the indexes up to around 45 to 50%, I'm going to be super happy because the core of the portfolio is built up, and that's where I want it to be. And I don't want to change it. Like, this is what I wanted my portfolio to be. I wanted it to be half index, half high payers, get a lot of yield, while at the same time having the safety of the ETFs as an appreciation leveler. I don't care about capital appreciation. I just want it to at least be level. So if the capital appreciation is going down, I know I'm doing pretty bad. It doesn't matter what the yield is on my portfolio. I want it to at least be level throughout. It's been gaining ever so slowly. I've been buying at all-time highs. That's what happens. But now I'm happy with the portfolio. I don't care if I'm buying at all-time highs. I need to establish my core position. So with that being said, Cash Flow Challenge will be once a month. The Spicy Dividend podcast will continue as normal every single Thursday. That's something that I really like recording. And now, you know, I had these one-off videos going here and there. I was recording like Sundays and then either like Tuesday, Wednesday, along with this on Mondays and the podcast on Thursdays. It's just too much. I'm burning myself out. It's not very interesting content anymore. Ever since I've been doing this since like 2 years ago, starting like dividend investing and on my Robinhood account and just doing videos on dividend stocks, there's 300 times the amount of YouTubers doing dividend investing now, and they can do it a lot better than I can, quite frankly. And I'm starting to lose interest in terms of like just diving into the nitty-gritties of it. I want this to be an enjoyable portfolio, and with indexes, it's going to be enjoyable on my part. It's going to be a lot more relaxed, a lot less stress, and that's ultimately what I want because there's a hell of a lot less holdings that I have to worry about. So I'm going to probably start doing other videos because I love editing and I want to get away from maybe the dividend space. That one of the biggest mistakes I made was naming my channel Dividend Grinder because I was so into the niche at the time and I just wanted like everyone dividends. I wanted everyone in the community to like follow me, and it's like, look, my name is Dividend Grinder, like follow that. But at the same time, it's like I've limited myself so much to just doing laser focus into the dividend investing niche. I kind of want to expand out. If I lose subs, then so be it. It'll be videos that I'm proud of that I'm going to start doing high quality edits with. The production value is going to be very good, way better than any videos that I'm doing now. And it'll be something that I'm happy to do and I'm proud of. If I lose subs, who cares? Whatever. It's my YouTube channel. I'll do what I want. If I lose subs, that's all right. But at the end of the day, it's going to be entertaining, and you're going to learn some stuff. And look, you might disagree with everything that I've said in my entire YouTube career, but you can't argue $350 to $33,000. Okay, I'm doing something right, and I'm not making like $300K in my job. I'll tell you that much. I'm not even making close to $100K in my job. Yet I'm still managing to put a lot of money into the portfolio. I don't care if you disagree with me. Point is, I'm very successful with what I'm doing. And don't forget, this is my individual taxable account. This isn't my 401k. This isn't my emergency fund. I have way more safe holdings in what you want to call my wealth building portfolios. This is, I hate to say it's kind of for fun, but this is the moneymaker portfolio, if you want to put it that. This is what's going to separate my life from the average person into, well, this guy's making $500 a month and doing it his way. That's what I'm ultimately getting at. But other videos will come out. So I hope you enjoyed this video of the Cash Flow Challenge. I'll see you the first week of September. If you're new to M1 Finance and you're interested in investing in it, I'll leave a referral link in the description below. You will help out the channel because I will get $10. You will get $10 if you use the referral link, sign up, and invest a minimum of $100. So hope you enjoyed this video. If you have any suggestions for future content you do want to see outside of the pure dividend niche community, just let me know in the comments. You know, I always read that. But By the way, I know JMac Investing did a diss track on me. I have not watched it. I never will watch it. I'm a grown-ass man. I think I'm a little bit above 16-year-old drama. Man, I'm so glad I soft blocked him from the comments. So if you think I delete his comments, I don't. I literally just banned him so he can comment whatever the hell he wants. Nobody sees it. So whatever, have a ball. This has been David and Grinder. See you guys and gals in the next video.